Welcome, beloveds, to the weekend market analysis for February 26th and 25th, 2023. By the way, I'm not going to be able to record a video for you guys next weekend because I'll be traveling. But let's begin with this weekend's market analysis video. Of course, I'll be covering cryptos towards the end, so stay tuned for that as well. With about, let's call it 25 minutes to go, this is how US markets are trading. They're down for the day and down for the week, as we know. And here's a snapshot of BTC down 3%, Ethereum down about 2.17%. Currently, for the week, we can see generally a big down week for markets, relatively speaking. Let's call it about anywhere from 3 to 4%. Bitcoin down the most, down about 4%. NASDAQ down about 3.3%. I want to begin taking a look at the market based on the NASDAQ, because the NASDAQ gives us a good representation for how the charts are shaping up. Here we can see where we are getting resistance is exactly where we thought resistance could come, and this is something we've been talking about week after week. There was a break here, of course, in early 2022, and then didn't quite get there, but close enough, and we knew that this would be a challenging area, and of course we're getting this movement down. Now, we did come, and right now, actually, we take a look at the NASDAQ weekly. The RSI is below 50. So if you are bullish, you'd want the market to close down and keep the RSI below 50 for the week. Why? Because then that gives an opportunity in the new week for the market to change its direction by recapturing the level back above RSI 50. In other words, if we end up closing above 50, then there is another possibility of another down week in the new week. I hope that makes sense. In other words, since the market is down this week, that's okay. And the bears have seen this drop, and this makes sense because the RSI is dropping below 50. If you're bullish, you'd want to have your opportunity also for a recovery leg by the market reclaiming RSI 50 in the coming week. If that's going to happen, only if the NASDAQ stays below 50. But that's not a biggie because other indices are also going to have their contribution. Something I want to discuss here is we should not underestimate this squeezing of the moving averages. And the NASDAQ again gives us a good representation, because if we take this area here, and I'll show that in the daily, essentially what we've done is we broke out, followed through, and we've come all the way now to test this area here. So depending on whether we bounce back above this area in the weeks ahead and keep this breakout intact, that would be a bullish scenario and a green flag for bulls. Now, if the market was to deteriorate below the moving averages, then that would be a red flag, because now the breakout has failed. The NASDAQ daily, man, this captures this very well, because we can see again from a daily breakout perspective. We take this daily closing high, for example, here. There was a band of resistance here previously, and you'll see that eventually we did break out here, tested it here again, and now we are testing this general area again. Now, what the bulls want is ultimately this to hold. It also happens to be around an upward sloping 200-day moving average. Remember last weekend I was explaining this scenario where we have a flat 200-day, excuse me, this is the 50-day here. So this is the flat 200-day moving average here. The 50 is the one that is sloping higher, and the NASDAQ is coming to test the 50-day moving average. So eventually a scenario here is this turns into a future breakout based on the more divergent breakout. But for that to happen, we need to start holding around here and build for a future breakout. Like I said last weekend, if we stay below the moving averages, for example, if we stay below the 50 and spend some time here below 50, that might be a reason to now understand that the market has truly changed its behavior and is looking to go down. Right now, in my opinion, I think yes, we got the pullback, but the charts are still decent from what I can tell. Another way to view this, take a look at this daily RSI line connecting these areas here, and you see how we did have a good market reaction here, which is this phase. We tested the line here for these lows, and I would suspect that if this can hold day to day on this NASDAQ daily chart, then this is where you would anticipate that there's going to be a recovery from around current levels. Something else also to consider, by the way, is if you take a look at the NASDAQ and consider where it came off the lows, which is this area here, this is still intact. We haven't broken this RSI range based on the uniformity concept. So in my opinion, just judging by the structure of the market based on how the 50-day is setting up, the 200-day and the RSI on the daily for the NASDAQ, my personal thinking is this is a well-desired pullback for the bulls. They might not know that, but they desire this pullback so you can set the stage for a meaningful move higher. So until we see the market break the 50-day moving average and stay below it, I'm still thinking this is a decent pullback after these major lows. So these lows, in my opinion, are still intact. And yes, you got the recovery leg. So we got the recovery here. And this is the first meaningful pullback. And I don't think it's a sign that the market is broken. In fact, I think it's just a normal pullback within the structure of after making major lows. This is always going to be a pullback on your way to a strong recovery. So I'm not too, in my opinion, the bulls shouldn't be too worried. And the bears, if they really want to take the market down, would need to move the RSI below this area here, and they would need to do a strong push. The strong push would take this below the 50 and below this area. So right now, in my opinion, this is a pullback after a decent, if not major lows right here. Now, this is the NASDAQ, and again, from the hourly, we came off the lows here in this retest of the lows in this late December. This is represented by this little wedge here. Now, that wedge also, as you can see, and this is why I think this is just a normal pullback. Market hasn't broken down because this area is holding. And this is the NASDAQ hourly. The Dow weekly, we can see here below 50 for the week. Hence, we are having a relatively big down week. And this is consistent with dropping below RSI 50. Looks like it's going to close below 50 for this week, which opens the probability for this being the possibility now for a snapback move above 50 for a big up week. Remember, the last time we moved above 50 was here on the weekly for the Dow. We had a big candle right there. And again, remember, we were looking at this and there were many attempts here to move above the line on this price trend line, but we were rejected. So now this makes sense that the market is pulling back after this resistance. The question is, are these lows intact? That's the question in my mind. Are we done going lower? Are we going to pull back here and ultimately go higher? I think that's the main question. The question of a pullback is now in the record books. Now we have to ask ourselves, where do we go next? S&P 500 for the week also moving its RSI below 50, hence a relatively big down week. And as I'm saying here is, as we close the week, if we stay below 50 for the week, we open the probability for a recovery back above 50 in the new week. Now, the reason why I suspect that this could just be a normal pullback after a major recovery is for the market to go down, we would need to break this RSI lows line on the weekly. And as you can see, we haven't even reached this break level. So in my opinion, as long as we're above the blue line, this market can go down even more and still be structurally okay. Remember, we're coming to the end of the month here. By mid next week, we're going to start a new month. And that could also bring another dynamic into the market. So just keep that in mind. And we can see here the S&P 500. We can tell that there's a little bit of resistance here that has cropped up. It tends to capture this very well, where we have this pullback area here from middle of 2022 and again here late 2022, and here as we begin 2023 is turning into resistance. So if the S&P 500 on a monthly cannot clear this blue line, and if we drop below 50 on the month, we drop below 50, I would suspect that that continues pushing the agenda down. And that's why I'm saying if the bulls want the market to go higher, you need a pullback so you can eventually have the momentum to clear this resistance. So as we go into a new month, the monthly charts are also going to start playing a major role. And we can see here, for example, the Dow, we can conclude here that there is some resistance here. This is where we broke down in early 2022, and now we seem to be forming a double bottom. So as long as that's the case, and especially if the Dow breaks below 50 on the monthly, that break below 50, let's say in the new month or in the coming months, the month it breaks below 50, expect a big down month. Now, if it doesn't, and what we end up seeing is a market that turns around and clears the resistance, if we can clear this range here, then that would mean that the market is actually not going to be going down, but believe it or not, going to be making a decent attempt at fresh all-time highs. Going back to that Dow weekly chart, if we take the recent weekly closing low here from December, that is at 32,920.46. We are below that number. So we can say that as long as we are below this number, there's really no reason to be trying to get back in the market. If you want to keep it as simple as it gets, below this number, you can say, okay, I'm staying out. And if the market recaptures this number, especially if it does it immediately, like for example, in the new week, if we find ourselves above this area here, then this was a trap zone and that the market was playing games and is now going back into this phase, this box here. So I would watch this number 32,990 920.46 on the Dow. Below that, the market should have some negative bias, and above that, the market should have recovered this week's pullback. Now, on the weekly for the Dow, the RSI, here's another reason why I suspect we need to be careful. To assume that the market is only going to go down, one option only, is not good, because we can see here where we clear this line, which is this period here. We test it here, which is this recovery leg, and we come close here, which is this lows, and now generally we're in this area here. So if we hold support on the Dow here, then more than likely one would anticipate support and an eventual recovery in the market, potentially ultimately to clear the recent highs on a weekly closing basis, and that would be the highs on a weekly closing basis for the Dow at 34. Let me see here, 429. Let me clear that. So 429.88. Anything above this in the future would be a market that is going to be really pushing the agenda to the upside, because it's going to now be changing its stripe. And if that happens, I would say we have our sights set to test the current all-time weekly closing highs. The Nifty also had a big down week, down about 2.6%. Again, this makes sense because the RSI dropped below 50. And now on the weekly, as we are seeing with other markets, we can see that this is an area where the market had a good reaction in July, which is this weekly candle here, and we haven't been back to those levels. So take that information and draw a uniformity line right here, and you can see we've come back essentially to test this line. If we bounce, then these are going to be short-term lows, and we are going to be moving higher. If this can hold on a weekly basis, then this is going to recover. And if it breaks, then clearly there's going to be another move to the downside. Now we can see this also on the Nifty daily. Go to the lows here in June. Take a look at where your RSI moved above a range, which is right here. Take that information, draw a uniformity line. This is the daily again for the Nifty. Notice uniform activity support here for the lows, uniform support here for these lows. We touched it here again for those short-term lows right there. Again here for these lows. And now we are back to test the same area. And if we hold, then these are going to be short-term lows. If we fail this time, then that's going to open the door for another round of market going down, another round of selling. Taking a look at GLD, which tracks gold, of course, should you be surprised that it is down about 6% for the month of February 2023? I don't think so. Couple of things. In fact, if we go to the long-term monthly chart for GLD, we can see we had been looking at the possibility of this being a resistance area based on this backtest line here. This is something I talked about a month ago, and of course we can see that it is responding to this resistance area. Also, another way of looking at it is simply there was a breakout attempt as far as gold was concerned, and it was unable to break out. So that in itself led to this pullback here. Now, that is true. If we take a look at the weekly, we see that it is starting to develop the possibility of a type of a short-term recovery. We just had a big down week, or let's say we had a continuation of the last couple of weeks down here, and now the question is where next. If I take a look at the daily, with the RSI having closed just under 50 for the week, we can see that the daily is coming back to this RSI lows line. We are also coming to retest the 200-day. So this is an area you can anticipate that institutions could have an interest. If it can hold in the short term, then we see that the commodities and gold could have a possibility of a relief rally, short-term bounce if this can hold. Now, if the moving average, the 200-day, fails to support this thing, then anticipate another leg down. If this RSI line cannot hold, then anticipate another leg down. But it would make sense that the market finds support, gold finds support, everything finds support in the short term based on what we are seeing here on the charts, as far as I can tell. By the way, take a look at this example of divergence. I mean, this is a good study. Lower and lower, higher and higher divergence. And out of that back-to-back positive divergence, we get this coiling energy that brings it higher. And this is happening after people get scared because it breaks the lows. And once it breaks the lows, there's a major exit, but you're just handing over your money to the institutions. And by the way, the divergence was very obvious. So anyway, I thought that was a good example of how divergence can really give you an indication of where prices are going. In this case, massive recovery right there. Not massive, but decent. By the way, in the short term, anticipate that the dollar is going to stay strong as long as it is above 69.1 on the daily. This is the UUP. So again, if the dollar stays above 69.1 on the daily, then expect the dollar to continue pushing to the upside. Taking a look at XLE, which surprisingly just closed positive for the week and looked like we were going to break these lows here on the weekly for XLE. That would have been at 81.84, and we did not break that level. So surprisingly, we can see here that this, what looked like a certain to happen here, did not happen. So that's a positive. And also remember, whenever we come to this RSI 50 area, XLE over the last, let's call it 18 months, has been holding this area for a recovery. So we are back in this RSI 50 area. If we hold again, then there's a chance that we start stabilizing and building, continue to build this. Remember, this space has been going for a while. So this is this range here. We are still in this range. But for that to stay true, we need the RSI to hold this RSI 50 area. It's another way of saying that as long as we are holding the RSI lows line for XLE, it has yet to break. But at some point, if and when it breaks this line, then that is when you can anticipate a significant drop as far as XLE is concerned. By the way, on the daily for XLE, support is coming on this RSI lows line on Q. So as long as the daily RSI is holding, then this is now, in my opinion, stabilizing sideways here, potentially to higher, as long as the weekly and daily RSI support lines continue to hold. Taking a look at crude oil by the way of USO, we can see here that we are still forming this wedge, closed almost unchanged, positive, slightly positive for the week, and we can see there's a price and wedge formation also on the RSI. Ultimately, movement above this area to the upside is what the bulls want to see, and a breakdown below this area is what the bears would want to see. So we are still wedging here. So far, it is stable to sideways as far as crude oil is concerned. The VIX on the daily, by the way, before I forget to mention it, we have this break here in October of last year. Now, this is again based on my uniformity concept, which is an original concept by yours truly. We can see we tagged it here for this reversal in the VIX, came close here, another reversal area, already tagged it this week, and we pulled back. So if the VIX is going to move higher, I would watch this $23 price area, because a breakout above that, so a breakout above the recent daily closing high, would actually lead to a decent short-term move higher in the VIX, and it would clear this area, which would mean the VIX would go higher. But if the VIX is unable to move above 23, and if the RSI continues showing resistance on this line here, then the VIX is going to stall, and we are going to see the general market start recovering. BTC on the weekly. Let's go back to the trusted uniformity concept. And I talked about the possibility of this being an area of resistance. Market seems to be responding to it. All right, so we are getting the pullback. Okay, that's good. Now the question is, where do we go next? Now the one thing I've been saying, like I said, with the NASDAQ here, remember we have a flattening out 34-week moving average, and we have an upward sloping 13-week moving average. So we are not out of the realm of possibility that this is just now working the possibility of a eventual breakout, which would be the more divergent breakout. So that's something to consider here, the squeezing of these moving averages, and the fact that we are trading above the moving averages is net positive in my opinion. But if the crypto market is to move higher, it's going to have to clear this area, or BTC is going to have to clear this area here so that prices can advance. The more we stay below the blue line, the more we run out of energy around here, then we are going to go down. Remember, if we're going to go down, first and foremost, the first order of business is we would have to move prices below the moving averages. Right now, price is above the moving average, so I give it the benefit of the doubt. Now, also on the daily for BTC, a couple of things here is, number one, we have yet to break this simple RSI lows line. It's the line connecting recent lows. And then number two, we have yet to break this breakout area here. And I think that was significant because it really launched this move here. Now we take that information and we understand that we need to break down below this line here if we are going to go down. The last time we came to challenge this area, we held support here, which is this line here. So you can see we are above both lines. And as long as we are above both lines, in my opinion, this is a market that is sideways to higher. And if we are going to go down, the cryptos and BTC in particular would have to be below its moving averages. For example, it would have to be below both the 200-day and the 50-day moving average. Right now, it is trading above the 50 and the 200 day. So net, this is a market that is sideways to higher as far as prices are reflecting right now. So the markets are closed now for the week, and bulls got what they wanted. The NASDAQ weekly closed with the RSI below 50 for the week, which opens the possibility in the new week it might recapture, retake RSI 50 for a decent recovery up week. Here is how US markets closed for the week, and we can see a quick snapshot for BTC and Ethereum. I am Eric with Mother.com, and I leave you as I found you in the love light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator, Adonai.